All right, good morning once again, everyone. Great to have you along with us on this ride. Today is Friday, and that's with an FRY day, May 22nd, 2026. And this is the audio addition to the Daily Trader Strategy Briefing. NFA Compliance Rule 2-29C, subparagraph 1. You are all familiar with the risks associated with trading. All right. So today is cycle day 3, and cycle day 3 targets have now been fulfilled on both the ES right over here at the 7487s and on the NQ at 29,471.50. So very nice, good solid cycle dynamic this round. And again, let's kind of just review that cycle. All right, just the whole dynamic of the cycle. And this is probably as near to the templated, you know, cycle outline, right, as we've seen recently. All right, so what's the premise of the cycle? Premise of the cycle is to establish a low, right, from which to rally from. All right, so that's the premise. All right. Okay, thank you, John South. Hope your trip was nice there. So what did we have? We had a rotation down. Okay, and this is the cycle day 1 low. All right, so we had a rotation down. All right, we had a subsequent bounce, and then we had a retest of that cycle day 1 low. So that's kind of a real good structure. And some people certainly would call that, like, say, a double bottom kind of structure. All right, but again, whatever you want to call it, you know. And here's another thing that kind of you can look at. And again, this is just a review, but not only just as a review, again, I'm very much encouraging to everybody to try to constantly go back and look at the charts and try to outline, make some sort of an outline for yourself of you know, what's been happening, okay, and then where potentially changes could occur. Not that they will, but they may, right? So another thing that you can do here is, kind of connect, right, highs and lows, right? And it's all kind of basic, but you know, one thing about me, if you haven't already figured it out, I like to go back to basics a lot because I know everybody wants to advance and get all to what they call the good stuff, all right? But really the good stuff, air quotes, is really in the basics. All right, it really is. So again, we want to get to the good stuff. And unfortunately, the good stuff, the real good stuff, that's going to help us is boring. But it's the good stuff that really kind of brings home the bacon. All right. So one of the things here, again, we can look at is connecting and kind of extending this out. All right. In this case, lower highs. Right. So we have this cycle day 1 kind of double bottom formation, right? And in this particular case, this is something, I'm not sure whether or not I have a video on it, but you can use this one. When the market kind of makes what's called this, kind of a double bottom kind of area, right? I always look for what's called the mid pivot. Again, I don't know, I don't have a designated video on this, but I look for what's called the mid pivot. So mid pivot is just simply the highest pivot high between kind of these, two lows. Everybody see what I'm talking about, right? And it just simply forms a triangle, all right, if you connect it, right? It just forms a triangle. So what does that mean for me? That means that's really the high or the pivot, the key pivot, right? That needs to break for this down structure to truly shift, right? Needs to get above, or in this case, if you reversed it to the opposite side, below, but in this case, above, right? So you get this double bottom. That hasn't told us that the market's going to rally or structurally it has shifted, right? Remember, we're looking for shifts. What that occurs when the market finally does begin to rally. Now, again, this is on a 60-minute, but again, when you keep everything in context, even that area where the market has begun rallying is tradable on the lower tick charts. Certainly is tradable, right? But when you're looking at it from the bigger picture, all right, and again, why are we always kind of focusing on bigger picture stuff as well? Because that's where the elephants are. That's where the big institutions are. That's where the big inflection points are going to be. And if we're looking, if we're going to be riding their coattails, right, staying aligned with them, we need to know what inflection points, are going to be more meaningful. Simple, but a lot of times we tend to forget that. So I try to, you know, little reminders like this. So anyways, we get a finally price gets a finally a break above that downtrend line. And again, there's still, even though it broke the downtrend line here, notice where it rallied to initially. It rallied to that prior pivot or the mid pivot and then kind of stalled, right? So that would be the first touch or test of that mid pivot. And again, this is my, visualization of it. Somebody may not see it that way else, but that's mine. And then if you again had drawn or visualized this downtrend line, the next several 60-minute bars, right, came back and did what? Retest. Okay, so this retest, what can we also kind of view this as? First pullback, but on a 60-minute. Okay, it still constitutes a first pullback. But the nice thing about this structurally is it held this extended downtrend line. And a lot of people look at that, look for that. A broken downtrend line, a retest of it. And for us, again, it just simply constitutes a first pullback. Now, what would be the expectation? Well, look back at where the mid pivot stalled that first rally. That becomes the inflection point, right, for the next move up. This all kind of structurally making sense? All right, and of course you see the rest of what has happened, but that mid pivot area became a very key marker for subsequent tests, which again kind of put in some, kind of a formation of a double bottom. But in this case, you can kind of like, when we start extending this one out, it kind of framed out, okay, some sort of a range area. It's all easy to see, guys, after the fact. But the reason why I wanted to go over this is, to help us visualize, how structural patterns shift. And again, we're always in the micro time period intraday, but again, taking that step out, right, can be really, really, really critical. Okay. All right. Yeah. Happy Friday, Mark. Good morning. Or good afternoon to you now. All right. So then the next inflection point becomes breaking out of that higher high there that we've outlined, right? And then notice here, prices popped above it and rejected, price above it and rejected for a couple shots. right? And then rotated back down, found support. And then now this is kind of which is leading us into, by the way, this was cycle day 2 activity into this, right? From cycle day 1 into cycle day 2. So what do we expect typically for cycle day 2? Some sort of backing and filling, consolidation. For an ideal cycle rotation, that's what we're looking for. And then the final part of that, which we enter into today, is once that consolidation finally runs its course, the expectation is for a continuation higher. And of course, we have CD3 now. All right. This is outlined pretty well, in the free documentation we have on the 3-day cycle. So be sure to, kind of check that out, right? So then what happens is you have the entire cycle where you get your rally off the low, kind of a pullback, right? And then a continuation of the cycle rally. So this is really a kind of an ideal real-time example of how this cycle unfolded, where you get the low, right? First, a retest, a move higher, right? Break a structure, some consolidation, and then a continuation higher, which ultimately hits the 3-day cycle target. And now we're just, again, being on Friday, end of the week, going into a holiday. I mean, the market can certainly can extend higher, right? If it wants. Again, we're at all-time highs again, near those all-time highs. So market can continue higher, and we'll just kind of maintain that long, bias against the overnight low right here, which is around 66s. All right, our line in the sand, by the way, today is what? Did anybody check it? 65s. All right, so line in the sand today is 65s. So that's holding well overnight, and that becomes our marker for now. All right. All right, that is the skinny on the mini. Hopefully that helped kind of review. And again, if you want to review this, of course, being recorded, and go back and check this out and kind of review the cycle dynamic. This is really an ideal cycle dynamic this time around. But okay, that's for the cycle. So let's go back and focus on more intraday activity. Okay, overnight or early this morning, anyways, D level got tagged twice. All right, we got a D level tag twice. We had some good opportunity there. Um, we're there as we begin the opening now. So if you still want to play the D level, per RTH structure, right? You're in that zone at the moment, and we'll see what happens from this point. All right. Any questions? I'm sure you don't. Most of the time you don't. I must be doing a good job. So hopefully that's all clear. Clear as mud. Yes, thank you very much. Clear as mud. All right. Again, I'm going to be cutting out here at 11:30 today. Heading out for the long weekend, and of course, the charts will be down. But if anybody wants to show their charts or would like to jump on the mic, right? I know everybody's jumping in and wanting to do that. But if you do, all right, just give me a quick message, and we can get Marlon and you squared away, real easy. Also, one thing about the system, um, soon we will have the capability uh, myself and members to do one-on-ones within the context of the system. Okay, without having to go to like TeamViewer or Zoom or another, we'll be able to actually do what's called a workshop. And so that's upcoming with the system, another system update. All right, once that's been fully tested. In other words, we'll be able to talk directly one-on-one through the system. So that would be cool. It's gonna really be nice for when I do one-on-ones with folks. So all good stuff coming. Little preview there. All right, again, D level here, right here, D level money box. If you so choose on the opening. All right. Let's see. I think the A10 already got tagged. Yeah. So the A10 here already got tagged uh, during overnight. Okay. So what does that mean? That means if it gets tagged again, if we get a pull back down to the A10, the auto X will not trigger. Okay, that triggered the auto X. So it's always the way I have this designed. Again, you all should know this anyways, but the way I have designed is on the first touch. All right. So regardless of the session. So if you do want to trade the A10 from the first touch of the RTH session, then you would need to do it well, yeah, you would need to do it manually. Okay, so if that's something that you want to work on, all right, it would need to be done manually. All right, the obviously the early lean Captain Obvious here is to the upside. And of course, there is, some optimism out there, certainly about a potential, Iran deal. But again, you know, until it's signed, sealed, delivered, and complied with, right? Call me a skeptic because things can change, right, in a heartbeat. But I guess Trump is giving it every chance possible for a peaceful solution without having to go back in. So the market seems to be viewing it that way. Again, we always say kind of, our opinions don't really matter. It's what the market's opinion is all about. And if the market opinion, they have, the key about that is the powers that be have better information than we do, right? That's my assumption. They have much better information than myself. So um, I'm always assuming I'm being lied to. Propaganda, call it. So they have all the information. But when the big folks out there are, investing, right, with their monies, they're doing that. Why? They have better information than us, so follow the money, as they always say, right? Well, I'll coin the phrase that Danny Riley over at Mr. Top Step says often. And what he says, the boys with the better seats. The boys with the better seats. Okay? In other words, those that have the more information, the boys with the better seats. And again, just another perhaps, reason, if you want to put a reason to it, to stay alignment with the dominant force, right? The boys with the better seats. Yeah, those that run Wall Street. The boys with the better seats. What's the song? The boys are back in town, Thin Lizzy. All right, so again, just leaning to the long side early, waiting for some sort of a pullback. If this area does reject, again, we're in the D-level money box zone, so if it does reject, all right, again, those are in play. Here's a good clip of speaking about the boys are back in town. All right. Here's a good clip of Nuno Betancourt and uh, and Rick Beato. Uh, one of my one of my guitar teachers playing "The Boys Are Back in Town" by Thin Lizzy. Check that out when you have a chance. All right, staying long, looking for longs, pullbacks. Right now, the D-level money box not really responding at the moment. So just be patient. All right, they're running away with the ball early. Give us a chance. All right. Again, NQ and ES both, by the way, on the open range. Let's bring that in here for a quick look. Both triggered long on the open range, and then the crude oil here did trigger short, but got stopped out. Should be no surprise there. All right, so long on both ES and Q on opening. And they're just running away with the ball here. I'm gonna be patient for a flip if you're looking for a short. What do we get? All right, still kind of cranking here. Yeah, that was a pretty good video. Rick Beato is again one of my kind of online guitar teachers. I have his. Um, he's taught me quite a bit, and I've actually had a couple one-on-one sessions with him. He's a real cool guy. He's my age. He's been around for ages, but he rips it up too. Yeah. Do you watch his channel at all, Bruce? He has great stuff. What makes this song great? You know, what's really cool, these musicians that have been around and, really well experienced, they can cut it up with anybody. Just jump into a band, you know, right? I'm sure they did zero rehearsals. Yeah, I saw that one, full length with Getty, the Gad, and he just jumped in there with Nuno and just ripped it up. I mean, you know, all I can say is I couldn't do that. Not yet, anyways. All right, buy side still the dominant side at the moment. All right, again, if you're looking for shorts, scalps only. All right, if you're playing on the D level money box area, again, manage it accordingly to your plan. But right now, again, I'm not seeing any reversals indications yet. All right, all right, yeah, Bruce, you should get it if you don't have it. The Beato book, the Beato book, the Beato Bible. When I go through it, it makes my head explode. All right. What do we got on the NQ? How's that running? All right. NQ a little lagging. So keep an eye out on that for Qs here for the ES. Little lagging there. All right, so again, D-level money box still an actionable area. All right, so starting to get a little downside happening here. So again, if you shorted near the upper money box near the 17s, again, scale back down into the 07s, right, 10ish. If you scaled, if your entry short off the MB1, okay, your scale would be down into the 97. So basically 10 handles. And we've gone through this a little bit, all right? Roughly the average range of, typically of the D-level money box zones is around 10, plus or minus 11 maybe, typically those. So, generally it's going to be around 10 handles, between each level. Not always. Again, it's all depends upon volatility, but, kind of normalized range tends to be around 10, 11-ish. So we can kind of use that as a rule of thumb. But again, if you're in around that 17s, didn't hit 17, it hit 16. So if you're shaving it by a point, you're coming back down, into the 06s, which are already traded. And then if you're short off of MB1, which is around 08s, again, you're looking down into the D level, which is around 97, 98s. Right. So there's your 10-point kind of range. Right. So for targets. Right. Not much more to say at the moment. NQ holding midpoint opening. Same for the ES on the pullback here. Well, today's recording will contain a lot of dead air rather than a lot of hot air. So when you go to review today, not really much to talk about here at the moment. Michigan sentiment's going to be out in a couple minutes. That would be the next top of the hour. All right. All right, you got University of Michigan coming up momentarily. Could be a mover. Just be aware of it. I don't know, guys. You figure that one out. I have no idea. All right, so if you showed off the money box MB1, okay, as we spoke earlier, you got your D level here now. D level got tagged. So MB1, MB2, all played out. All right, and that was again on the short side. Now, if you're looking for any further extension, lower, the next target would be prior high. Okay, that would be next level prior high. All right, starting to roll now. You can see the shift that unfolded. This is what we like to kind of look for as well, right? You can kind of wait for this, shift to unfold. Okay, and then you got, again, you get your premium play here, right? If you weren't shorting it right up into the level, you could, there is also a play. Today we had the play where you could wait for a pullback or back test of the level. That is in the playbook, at least my playbook. That is in my playbook that I've shared. Hmm. Yep, yep, All right, so from this level, again, we're at VWAP here, so we could get a response there from VWAP, but the next level would be on the short side here. If you still have an open position from the D-level money box zone, would be the prior high, right down there at the 87. So basically all 10 kind of handle moves. Slow, grindy moves, but nonetheless effective. It's gonna hit the prior high here, so should anyways. There you go. Bingo. Here you go. Go figure, right? Go figure, naysayers. The naysayers. All right. At this point, again, the core trade the core trade is complete. Okay, the core trade is complete. If again, if you have any leftovers, um, up to you, but that's the core play. Yeah. All right. So prior low held for a bounce. All right. So again, that's an alternate play. Is if you weren't short targeting the prior high, right? If you're looking for kind of a long probe, the prior high is obviously a well-known level and again, you would expect some buy responses from that area, right? But more of a cover area versus, a long. But again, just some of you, a little bit more aggressive on that side, kind of take a tag off that for a bounce. Nothing wrong with that. Uh, Not necessarily a core play for us, but certainly a play nonetheless. So we'll see now a further break now below prior high would obviously push price back down into the range. And again, that could spark off some additional selling, right? So be watchful, mindful of that. If the bulls want to continue to, BTFD, then they're going to be looking to hold that prior high. Yep, well played, well played. All right, so kind of sitting at VWAP here at this stage on the bounce from prior low, excuse me, prior high. And again, we'll see what the big boys want to do from here. Continue to kind of rotate it down, stabilize, or retest the upper edge. If we do get a push on the upper edge, you got the A10 sitting up there at the 7505 area, 7508 area. All right, for a potential play. Stocks hit new record highs as Americans' consumer confidence collapses to record lows. Okay. It does not compute. It does not compute. All right, NQ heading down as well. Opening range plays got stopped. Didn't play out today. Bulls are gonna fight it here, right around this VWAP prior high. Right, you get a nice little slug of volume right over here, right in this volume profile. So we're kind of looking at this edge over here, right? And then again the kind of this edge up here. So should the market kind of rotate, break this, balance section here, the prior high, we should get, again, next kind of level would be down here towards the, what does this look like? 78s. kind of 78's right there, right? So kind of just one step at a time. All right, so that's the outline that I have. As an outline doesn't mean it's going to happen, but that would be an outline if the market breaks down through the prior high at this stage. That would be the expectation on a rollover there. So again, the everything is shifted, of course, as we all see, to the sell side. So the first touch of the prior high got a nice little reaction, which is what we typically expect. Second touch here, second visit, bulls are going to have to really step up, you know, and defend it if that's their plan. Usually the first touch, it's just simply, shorts are taken profit off table, things like that, get a quick bounce. All right, second time around, it's not the case. Second time around now, if the bulls are going to hold this, they're going to have to hold it. Not just a little clip. So they're going to have to prove it that they want. Otherwise, we could get that drip lower, and then 78's become the next. I'm calling it 78's. I mean, it could be different, but all right, we're out of the opening range plays for today. All right, nothing. We got the trifecta, but on the opposite side, Just not really a good play on the open ranges today. Heading out for the weekend. All right, we got the rollover. So we got the pop up to the D level money box zone, which was in play. We got the rollover. Uh, First touch of prior high worked. Second touch, kind of at this stage, challenging it, not getting the same type of response, right? So this is what we anticipate on the second touch, not looking to get the same type of response as the first one. That's why the first touches are so playable, particularly on back tests. They're so well playable, with a high degree of confidence that you're going to get some sort of bounce or reaction or response is the term I use from that. Second time around, you see now the market's had some time to kind of filter out the trades and so forth. So now new sellers or existing sellers, whatever, have come further in. Now you don't see the type of response. Make note of all this stuff because this is, if you haven't already and you're not aware of it, these are the type of things that are more likely to happen. I mean, we're just trying to, lay out the potentials, but when we lay it out and it starts playing out that way consistently, you can see um, how there's your 78s coming in. My drawing has moved, but you see we're coming into that 78s. There's a 78s tag now. All right, so 78s next level. All right, tagged. So my drawing kind of moved moved off. It doesn't conform with the chart. All right, so 78s. So that was the outline. All right, so that was the outline. Let's see if that what happens from this point on. I don't know why that didn't fire. Oh, I know why it didn't fire. Rat bastard. David. The premium here up here, that was valid. If you notice here, I have the friggin' thing disabled. I was wondering why it didn't fire. Oh, look at that. I forgot to enable these. Sorry about that. I'm saying to myself, why didn't that fire? What I'm talking about is this premium here. That should have fired. I didn't have the the ATA enabled. Oh well. I missed that on my checklist today. Sorry about that. I got distracted this morning on a number of different things and didn't turn that on. How do I make my um hold on. So Oris, you want to make yours look like this one? Is that what you're saying? Is Oris with us? I don't think Orist is with us this morning. Are you with us today, Orist? I think so. I don't see him. All right, I'll respond to him on the email. Oh, I see what he's asking. I know what he's asking. Okay. I know what he's asking. All right, I'll respond to him after. All right, I'm going to cut out the opening range charts. I want to use that monitor. All right, everybody's finished with that one? I know I am. Let me stop that stream. I want to use that monitor for something else. All right, one thing you can think about here as well against the prior high is a potential reclaim above it. Okay, so again, we got targets into the prior high. How come I don't have the prior high on this one? Hold on a sec. Daily open, high close. Is that down? No, that's not the prior high. I guess I don't have it on this one. Okay, so we can look at it on this one over here. So one of the things you can do, again, we got the move down into, right? You got to move into the prior high, got a response, right? Got to move into the prior high again, and we got a move below. Okay. Now, the next thing you can look for potential would be the reclaim. So the market currently is back above the prior high. So the reclaim is you'd want to see what? You'd want to see this area now begin to hold, right? The prior high, quote, air quotes, right? Zone, not just necessarily that hard level, but the zone around it. You want to see that, begin to hold. And then, with the execution charts here, right? You'd want to see, the market start shifting, back and holding, right? So that could at least, stop or stem the downside, and then you would look for this low to be a key support low into the 78s. We marked off 78s for you as the potential. All right, we got that beautifully. And so now it's just we get a bounce back up and see if we can hold it. That would be kind of another potential, right, for to kind of have the bulls reassume or reclaim dominance there. Is that clear for everybody? All right, so just again, kind of an idea in that realm. You know, another thing you could have done, right? Did anybody map out? Did anybody map out the swing here for that low? Bueller, Bueller, Bueller. Okay, all right. So what was the map out of this? Right, this low, right, to this high, and then what could you have done? You map out this low to this high, and lo and behold, what did you got? All right. I know you see it, but again, just kind of a reminder, right? You take some sort of a swing measurement, particularly when the market starts breaking down below that, and then the question becomes, you know, right, what levels, you know, would be next? Okay. PKB, yep. PKB, will look below, and that's what I'm describing, right? So in this case, you know, these levels would be in play, all right, for a reversal back. So how would you play something like this? Again, I'm repeating this only because we're being, you know, again, we're being recorded here, right? So I want to have this on the recording, all right? So how could you play this? Anybody? So as the market's coming down, if this is what we call a dynamic, right? DLMB, dynamic D-level money box. Dynamic, since because we're measuring this particular swing. All right, so from this low to high, all right, we're measuring this low to high, and we're measuring if it breaks lower, okay, what would be some targets? So you have the D level, right? MB1, right? And MB2, money box 2. And then of course you have your final, you know, 162. All right. So you measure that out. How would you play this? How could you play this? Right. Certainly you could play it where, you know, you put limit orders, right, at these levels. All right. In terms of more of a dynamic, you know, measurement like we're seeing, all right. I'm gonna, what I tend to do is I tend to see if it gets a little bit further deeper than the D level, right? Because I'm really kind of in a more dynamic fashion here. This is how I like to look at it, all right? In a more dynamic fashion, all right? I'm more interested in trying to enter on the reclaims back above, all right? So in other words, market's coming down. You see the D level, you see the money box zone, right? You know, and again, you're continuing to monitor this. It could stop at any of these levels in reverse, okay? So you continue to monitor it. And then what you could do is you could do, okay, let me put, you know, a buy stop here. It goes a bit lower below these levels. Let me put a buy stop here. This is more the dynamic versus the one we just came off of, which is more the daily. All right. There's more intraday activity. And then, you know, if any of these levels, right, reversed, okay, you could, you know, you get in on the right side pivot rule and you have a pivot. Okay, same thing here in the observation. The market went a bit lower to the 161.8, and then what would you do? You put, another kind of buy stop. All right. So the idea then is you're looking for the pivot back up to get in instead of just buying them on the way down. I mean, you could do it on the way down. Not saying you can't. That's up to your, how you want to handle your plan. All right. I'm discussing more of a dynamic where you can take a measurement throughout the day. Hey, I want to measure this high to low swing, and if it breaks this low, what would be some of the levels to consider? Okay. So when I selected the 78 level there that I posted, right? How did I get that? Right? This is what I did. Right? I measured this swing, high to low, most recent swing, or low to high, and then just ask the question, if it breaks, right, what would be, some levels or a level where I would consider? And I basically, brought it down to, the 78s here, right? It could have stalled before that, could have reversed easily, 81s, 82s, fine. I'm not trying to like be, super, spot on everything. I'm just trying to map out a potential, right? So then as the market comes down, do you really want to short them down here? Does anybody really want to short them down at those levels? All right, where you had the bounce back up here, where it was really more shortable. I wouldn't want to be shorting down there, right? So what do you think would people would be doing there at that stage? One, longs would be blowing out, shorts will be covering. So at least you're going to have some reaction, potential reaction there, right? Also on, anecdotally on the bigger picture, there's a couple points of control in that area from previous days, right? But you don't see that on the chart here, right? So anyways, my point to this is the way to play these, or one way to play them. So like I said, you could do, limit orders on the way down, right? Just buy the levels, or you can wait, and do right side pivot rule. Okay, that's coming off the deep low, right? The other part of it was what Libby just said, right? Was to play, the kind of the PKB style. PKB is a reclaim, right, of the prior low. Excuse me, in this case, the prior high. So a reclaim of the prior high. So you'd have to wait for the market to come all the way back up, and then you're in on your trigger is basically through the prior high. Is everybody tracking with that? And then your max stop will be down here, but you can also, you can have a stop loss, certainly much tighter. But that would be your max, stop loss level. Okay. So you could play a PKB, and the PKB is a reclaim back through the prior day's high. On the flip side, you could play the dynamic D-level money box levels, and you could do that as we just outlined, either entering on the downticks, right, or entering on the upticks using right side pivot rule. Questions on that? All right, I wanted to outline that when you go back and review, right, today's activity, right, you have that in your pocket, right, to review if you wish, right, but don't say I didn't review it. All right. Also, again, if you are reviewing the sessions, the morning sessions, you should be able to download them to your local drive. I hope my mic was on, because Don't want to repeat that. Oh, there you go, Orist. Okay, great. Oh, you're in with us. Hey, you asked me a question on the profiles that I was showing. Yeah. So the profiles that I use, the one that, so this is the profile that we have on Sierra Chart, right? It's kind of a generic, basic one, not really too inspiring. All right. The one that I use that you were asking about is by a guy called Smash Lido. Are you familiar with him at all? Okay. I'll send you his uh I'll send you his link. Uh so let me just so this let me grab the come on. This is the one you were asking about. All right. Yeah. So with this one, he does a great job. I'll send you the link. I'll post up the link shortly in the room after finish speaking here. But what this guy has done, he's I mean, I could never, this is Sierra, and I could never do this. So I ended up buying his. It's really not that expensive. It's really worth the time, the price that he charges. Um, and I don't remember the exact price off the top of my head. But for all the labeling and everything that he does, it's just, I could never do it. As you can see, the one I have over on the left, frankly, I don't even really use it. This is the one I use most often. And what he does here is he splits the sessions. Okay, so you can see here, and this is what you were referencing. So you have the US session. Let me just move this up a little bit. So what session is this? So this is Asia, this is Euro, and this is US. I'm sorry, US. Okay. So you can split the sessions, you can merge the sessions, you can do a lot of stuff the Sierra chart allows you to do. But yeah, so I'll post the link up. Go check his site out. He's on Substack, and he also posts a free newsletter, so you may want to check that out as well. Uh, I like to I like to pass along, you know, tools and other folks that I find, certainly useful for myself, and things that I can't do, such as create, these type of charts. I just can't do them. All right, so I'm gonna go if I find somebody that does a better job than I do, I'm gonna buy it. You know, let me see if I can get his. Here we go, Smash Lido Daily Report Weekly. Okay, uh, let me get his link. Okay, so so here's his website. And if you want to follow him on Twitter or X now, whatever it's called, that's his X feed. And his Substack, and like I said, he publishes a free letter. Okay. If you go on I think it's his website, smashleader.com, check around there. And then I think that's where you'll find his tools. Um, Yeah, go into chart books for Sierra chart. That's where you want to go. Chart books for Sierra chart. And he has packages, so check those out. But that's what I use. All right. So I hope you find that helpful. I certainly do. All right, let's just kind of do a quick okay, let's do a quick autopsy here while I was away. All right, let's see, we're long of the A4, short of the A10 here. All right. Oh, one thing to be careful for, just this kind of just puts this in my head for a moment. If any of you are trading these, prop accounts, okay, be sure you're aware of if you're trading, different strategies in the same prop account. I'm sorry, in the two different prop accounts, right, sub accounts. Um, be very, very careful of having one long and one short. Like I'm running pure simulation counts here, for demonstration. So these aren't prop accounts. But if you're running one of those prop accounts and you say, oh, I'm going to run the A10 in prop account number one and A10 and A4 in prop account number two, right? You're thinking, oh well, they're in the independent accounts, right? You can't do that, right? So you got to be very, very careful. What will happen is you'll bust both accounts because they consider that hedging. Yeah, right. I built. Yeah, okay. Libby just says can vouch for that. Caused cross positions will blow out both accounts. So just be careful if you're doing that. Some of you, I know most of you are aware of it, but if you're not aware of it, all right, it can be very frustrating. It happened to me once a while back. Happened to Libby today, he says. Or all right, so I mean, it's an inadvertent, but it's something to you got to be aware of. Yeah, it can be easily happened, exactly. So a lot of times, we would say, well, I want to trade this account, I want to trade this, say the ATR, the A4. I also want to trade A10. It's great if you're there in alignment, right? So, for instance, the way I kind of have this currently, can you do it that way? Yes. All right, I can trade A10 and A4 in alignment. Okay, and that won't bust any rules. But how do you do that? Well, in the settings of the A4, you need to have it so it trades as the A10 is a what's called a dependency. Okay, in other words, they need to trade in the same direction. Okay, so if you're interested in doing that, you got to go into the settings of A4 and say, it's called an N reel, new realignment. But it's essentially a dependency, that meaning that the A4 will always trade in alignment with the A10. Is that understandable? Go check the settings and you'll see what I'm talking about. But here in this case here, as you see, this A4 is long and this A10 is short. If you're trading those in the same funded account or eval account, you're going to bust because one is their opposite. But if you have the A4 set to trade in the same direction always as the A10, you'll avoid that issue. Okay, so you could actually have dual positions, one in A10, one in A4 actually, but as long as they're in the same direction and you don't bust the position size, okay, you're good. So it's something I just, again, what happened to Libby earlier, and I'm looking at these, I'm saying, oh, one's longs, one's shorts, and that just brought that to mind. So something to kind of keep in mind if you're trading, with these accounts, with these prop accounts, right? All right, back to VWAP area. All right, all right. So again, back to kind of this long uh, play here, long short play. I got my stop at break even on the balance of the A10. Oh, there you go. It just get triggered. All right. And I'm going to bring my stop here on the A4. That looks like it's going to play out a little bit better. All right, there you go. A couple scales, stops even. Okay, we're coming up upon our cutoff time for the stream recording in about 2 minutes. Let me know if you have any questions. If not, we'll be cutting the stream off then. Um, and I'll hang out for another 30 minutes or so. But the charts will be coming down, unfortunately. Sorry about that. Is anybody interested in kind of showing their charts for the group? Maybe kind of conducting the lesson. Don't all raise your hand at once. I know it's a scary proposition. What? I have to perform in front of a crowd? What? No, you don't. If anybody is interested, if anybody ever is interested, to do that, we can always make those arrangements. It's really not. It's actually kind of I don't know. Could be fun. Different perspective, more engagement. I know you guys know what I do and how I do things, and that could get somewhat boring, I suppose. But so if anybody wanted to do that, I'd be interested in having others kind of take rotations. I think it would be fun. You know, I'd like to learn from myself. I'd like to learn, how other people are, looking at things and how they're explain things and so forth. Really, it's this. Keep in mind one thing, right? This is not about, it's always going to be about sharing and it has nothing to do with, uh, don't ever be nervous about anything when it comes to that, right? If you said, "Hey, I want to take the mic," all right, we're going to arrange you to take the mic. This new platform has that ability to do a lot of that stuff, and it might be fun. What do others, what are some of the other folks in the community look at, you know? And again, I'm not going to put anybody on the spot, right? But if you're ever interested, it's an open invitation for everybody and anybody that would be interested in doing something like that, right? That's all. So just keep that in mind. In the meantime, I am going to shut the stream down here. It is 11 o'clock. We went 1 hour 45, and it's typically our cutoff point. So we will reconvene on Tuesday. Monday's the Memorial Day holiday. Yes, the market is open half day till I think 12 o'clock or 1 o'clock. So futures, that is. I won't be around, and the room will be closed. All right, so we'll reconvene back on Tuesday. I do wish everybody a restful holiday. Um, review some of the stuff that in your plan, all that good stuff. Come back refreshed, reinvigorated, recommitted. That's a big thing, recommitted. And we'll take it from there. So have a good weekend, and we'll see everybody there on Tuesday.